Hello traders, Damien here. Today we're going to be discussing harmonics. We're going to put the patterns aside for right now and we're going to talk about just basic harmonics, the core of harmonics. Okay, by now we understand and know where price is likely to go with a very high degree of accuracy. With the process of order flow, we're able to understand how deep price is likely to go and how far it's likely to extend. We're going to add another level of accuracy to that by implementing harmonics and understanding that we have a basic expectation of price movement from a harmonic standpoint that are going to help us further enhance the accuracy of this methodology into having really great profit expectations and pretty good correction expectations aside from what we already know through the process of structure analysis, order flow analysis, and bar by bar. That adds another level of depth into our analysis process and our methodology to make it even more powerful. Okay, so why do I say that there's a natural order to the market? And we know that because we have that expectation of the market. We seek that natural order. That once price achieves something, we expect something else, and then from that expectation we expect something else. That derives from the harmonic expectation of how the market is balanced. Okay, and there is no secret that the market has a rhythm. Okay, now I understand most professional traders say that there's noise and that the markets are random. If it was random, the market was completely random, then nothing would work. No indicators would work, no Fibonacci's would work, no supply and demands would work. Nothing would work if the market was completely random. Or the chaos theory, as some other experts say. Might as well just flip a coin and enter the market at random, because the market is random. It is unpredictable. Well, I've shown you that that's not the case. I've shown you that you can accurately predict, forecast where the market is going with a very high degree of accuracy. Okay, it is my humble opinion that the people that portray this fiction are people that do not understand price action, do not understand price movement, and have no clue as to how to properly read a chart. Okay, they stay lost in the shadows of what the market is and gamble their money away. And it's sad to believe that some people that even call themselves experts trade under these conditions and under these ideologies. It makes no sense. It's completely absurd. So we're going to take what we already know and add that extra layer of depth to it to make our process and analysis even stronger, even better. It will enhance our expectations, and at times, based on the order flow, we will have a more clear understanding as to whether that harmonic expectation is unlikely or unrealistic to occur. Okay, right now I want to identify just basic harmonic moves. Okay, so we have an expectation on every single swing, whether it's a short-term order flow or a long-term order flow. That expectation is a 1-to-1. Okay, we expect price to achieve a 1-to-1 movement from the prior swing. This includes a short-term order flow. Remember, it all takes you and leads you to the same place. So why should we not expect for the short-term order flow to produce 1-to-1s when we expect the same thing from the large one, and it all ends up being or taking you to the same exact place in time and space? So that is our basic expectation of price. Okay, so I'm going to show you here that the clearest way to start this is by working off of a clear high and clear low, like everything else we do. Okay, repetition is the mother of skill, so therefore we will start off of a clear low and a clear high and project forward our expectation. We will do the same with the short term and see where we end up. So we're going to do it here with the benefit and hindsight, and like everything else, we're going to expand into a area of the chart where there's no hindsight, and we're going to go through this in real time, in a real time exercise. Okay, so I copy and paste that, move that down. As you can see, price completes to the to the exact point a one-to-one completion. Now if the market was completely random and full of noise, this would be an impossibility, okay? But now we can see that that is not the case, and that there is a order to price movement, and price seeks a certain balance. And what we see happen, we can expect to see it happen again to some extent, okay? That's not to say that price is going to go to the very point, okay? But we have a roundabout idea as to where this market should find exhaustion, okay? And it could fall short of that. It can even extend past that. It doesn't mean that it has to be 1%. It's an estimation, okay? It's an expectation, okay? Now, we're able to see that. Now, how does the short term play into that? Well, we have a swing here, a very small swing, right? Now, if we copy and paste that a few times, we can see that in this particular case, price extended past that just a little bit. Oops. Sorry, guys. And if we take one of the other ones, we see the price achieved that very accurately. And we take the other one and we see that price got in this area and extended past it a little bit. But look at that. Even on the short-term order flow, we have very realistic, very measurable expectations from a harmonic standpoint that price just has a tendency to want to achieve, okay? Extremely powerful. Again, now in this particular case, we have price correct upward here, okay? Now our expectation here as price broke structure here was for a new structure high. Price did not really achieve that and started correcting deeper and deeper and deeper. It eventually corrected 100%, okay? So we're going to take this one and set it aside for right now. But we're going to look at these moves down and we're going to say, well, is there anything here of value from a clear low to clear high? So we have different lengths here, okay? Remember what I told you, don't be afraid to project, don't be afraid to draw, don't be afraid to move lines forward and see where these lines are likely to terminate. As we can see, price got here and tried to correct. It just wasn't strong enough to and ran into some structure that kept it moving forward. Now that you have another clear high and a clear low, I apologize for my dog, okay, we can take that and move it forward, okay? And we can take that, sorry, let me paste it a couple of times, and we can see that in here we fell a little short. Here we came down here, price corrected very nicely, moved it here, price corrected very nicely, okay? So here we have a clear move from a clear high and a clear low. We had an obvious correction here. So this is a situation where price, we have an expectation to price come here and it fell a little short. It corrected very deep, okay? So, but producing that one-to-one expectation, we see that price, although had series of complex corrections and movements, price did come into this general area and did what? Correct very nicely and deeply, okay? And now we took, now it's off of here. Now once price corrected to this level here and we project that forward, price corrected right down here and then corrected very nicely, okay? Could we have used also in conjunction to find some of that confluence, okay? Could we have used any of these swings here to help us come up, kind of sort of general area here? So it's not 100% perfect, but as you can see, that by far, my God, price acts very nicely in some sort of rhythmic balance in an order, okay? How does price know that once it gets to these areas that there is an expectation that price will find exhaustion and correct deeply? It's extremely powerful and intense to see that. And now, even from a correction standpoint, look at this. Look at this. Look where it finished. Now here it just extended a little bit past that, but let's project it forward. Look at that. Look at that. Look at that. It's just mind-blowing how incredibly accurate this becomes from an expectation as to how far price should extend and how far price should extend and correct. It becomes an extremely invaluable super tool that's very simple, that requires no guessing. You just work off of swing high or swing low, and don't be afraid to project these shorter term and longer terms and find that confluence in line with structure and everything else to give you a very good expectation as to where price should come in and where it should correct. I'm going to do that this way and then this way, and then we'll move into a area of the chart where we don't have the benefit in hindsight and how we can project this forward so that you can see the amazing value it is. Now here we have a clear swing, okay, an attempt to correct, okay. This one corrects deeper, 100% here, not almost 100% of the shorter swing. So it's okay to give yourself something more substantial here, as we had a more substantial correction here than this one, and say, okay, this is the swing high that I'm interested in. Let's take that and let's move that forward. Where did price come to? Where was the correction? Okay, let's take that forward one more time. Okay, where did price come to? Where was that correction? Okay, could we use some of the shorter term ones to help us add another level of confluence? There you go. Oops. And there you go. Like I said, price is going to fall a little short or go a little past it, but it gives you a very good understanding as to where that profit area is, where that correction area is, and when you tie it in with structure and all the other analysis that you know, becomes an extremely powerful measuring tool as to what you should expect from a swing and what you should expect from a correction. Okay, so I apologize if you hear my daughter crying in the background. She fell. Okay, let me pause the video a second. She's okay. She just slipped and fell. Sorry. All right. So back on task here. Let's, now in this particular case, it becomes a little more difficult because you don't have great areas where price corrected. Okay, but here we see that we have a clear swing. Here an attempt to correct, so you can work off of that. There's no right or wrong way. Okay, so you can see price gets down into this area here. It wants to correct again. Okay, and then we can project that forward, and we can see that although price is trying to correct here again, we have a little area of structure here, and price is live right now. The market's open, so this would be an expectation as to where price is likely to find some sort of resistance, push on down and try to get down into this area here, which will be consistent where price has found support. So those of you that like to go counter trend or counter order flow, this would be a great area to look for longs, as price has not accepted any kind of selling beyond this area. And this is an area where price is likely to find not only exhaustion but longer term support. So this becomes a very good area for price to for you to seek along if you like, or the kind of trader that likes to go against order flow. Now what happened here? Let's see. There was no guesswork here. This is an area where price is likely to find resistance. We see the sellers try to come in. The buyers are stronger, very strong actually. We'll see. So it would become important to see if price actually breaks above this. This would signify what? An expectation failure, and for price to do what? Try to get its way back into the bullish side of things. Okay, so until this is broken, our expectation from a harmonic perspective is for price to get down to this area. I may form some complex corrections here, but that would be the expectation, as price has consistently achieved to some extent, something along those lines. Okay, so now we're going to stop this and we're going to go into a random place so we can do this without the benefit of hindsight. And you can say, well, this is very easy to figure out when you have the information there. How do we do this in a more of a real-time situation? So let's go back. Okay, and we're going to go a little bit more. Okay, and we're going to scale. Okay, and see here we have something that we can start to work with. What do we have? We have okay, so we have here is the obvious swings. Okay, we would expect price to come there. It came pretty close. Okay, the price has tried to correct. Okay, so one of the things that we can look for is for an expectation of the same to push price forward. Okay, so now we're going to move price forward. Say, okay, now we have something else that we can use here. We have this. What's our expectation? We achieved a very weak new structure low, so we expect a deep correction. We have a clear high and a clear low. This is something that we can project forward and say, okay, where's the structure in line with the deep correction? Well, it's very simple. We have an area right here that's consistent with our deep correction. We have price make a very weak new structure low, which would indicate breakdown in the general order flow. Okay, so this is a situation where we may not see price reach all the way down here, but we could possibly see a scenario like this. Okay, now in the grand scheme of things, has anything changed? Well, yes, we've made a new structure high here. Okay, so now we no longer, or should no longer, have an expectation of a new structure low. Okay, this is also becomes a situation where we may correct to somewhere in this general area. Okay, and our expectation is now for price to achieve a new structure high. So we can erase this right now. We can leave this one. Our expectation is now for a deep correction and for price to achieve a possible new structure high. Okay, so now we can take this, project that forward, and say, well, our expectation is for price to get somewhere in this general area. Is that a realistic expectation? It is. Is it one now? We've retested 100% of the lows here. Okay, we would have expected that to happen, but it ended up not happening. Okay, so now our expectation becomes for price to do what? Achieve a new structure low, right? Okay, now price is doing other things here. It's achieving a 100% correction, lower high, failed to make a new structure low, has made a short-term new structure high, has retested the highs. We're basically in a range here. Now once this happens, okay, we don't have very good harmonic expectation that projects price forward. Why? Because we're not making any new highs or lows. Okay, so we have a bunch of situations here where price is going to continue to do what? Where did price get to? What did price try to do? Okay, now The last thing we achieved was a higher low and trying to get near these highs. So more than likely, price is going to break this high and make a new structure high. Where is that likely to come to? Right? Now price is being very, very stubborn here and really stuck in this range. Okay? But can we use the information from the range to help us predict and understand what price is likely to go? Where is our next possible entry? Where is our next possible expectation? So our expectations for price to get somewhere in this general area and do what? Go higher, right? Our expectations overall is a new structure high. We have to adjust this a little bit and understand that now we have an area here the price is likely to get to, because our expectation is for what? A new structure high. It can't be anything else. We've broken that. We've created a new structure high. So our expectation should not be a new structure low. Okay? Because this is not the swinging question. We broke that here. Okay? So now this is the swinging question. We broke that here. Okay? So price ended up failing. Okay? But falling back to where did price get to? Look across. Did we have that identified on our chart? Yes. Now even though our expectations changed here because we had to follow what? The order flow and follow the expectation. Okay, nonetheless, from a harmonic standpoint, we got, okay, very clear understanding, even though our expectations failed here, as to where the price was likely to find support again. Look across. Okay, extremely powerful. Now, in areas of range, you're going to get beat up. I don't care who you are, I don't care what you do, you're going to get beat up. Expectations are going to fail, they're going to change, they're going to get stagnated. A lot of things are going to happen. Okay, and I hate trading ranges, and I usually wait for price to break out of the range before I decide to engage. Okay, and sometimes we don't have that luxury because we may be in a range the whole day, and that's when you can make the decision to trade the short-term order flow. But that's another lesson entirely, and I wanted you to see how these harmonic expectations could help you navigate through this and understand where possibly you may want to engage the market. And in this particular case, okay, had you gone in long somewhere here, okay, you would have gone to a break even at the Tesla structure, so you wouldn't have lost anything in this particular situation. And that's why I go to a break even at the break of structure, so that if you are in a range or if price is going to find resistance somewhere in this area, you're protected. Okay, that's why a break even trade doesn't break my heart. Okay, it's not nice when you have 30 or 40 points of profit and you end up with a break even, but it doesn't break my heart at the end of the day. Okay, for situations like this, when you get stuck in a range or when price is entering into some sort of range bound or consolidation area that is not yet obvious to you and you're trading an expectation, it gives you an opportunity to protect your trade, get to that break even point, so if that does happen, no harm, no foul. Okay, extremely important. Okay, now that price has spoken to us again, has made it very clear and decisive new structure low, okay, we have something of value here. Let's erase some of these lines. Let's erase all these lines here. Okay, we have our resistance point here. We have great momentum. We have great projection. We don't expect a deep correction at all here. We can draw our fibs here. Clear high, clear low. Okay, we see that we have structure confluence here. Okay, moving price forward. Complex correction. So if we're going to correct deeper here, what would be our expectation? So we draw our harmonics in to help us form an expectation as to where price is likely to go. That may or may not happen. Okay, so now where is price likely to complete? It's a little unrealistic for us to expect for price to achieve a 1-to-1 to the downside. Nonetheless, we can have an expectation for price to do that. As price starts producing complex corrections and price movement to the downside, you can use some of these to help you project that, but at the end of the day, you have an expectation for price. You have an expectation from a harmonic standpoint of what price should achieve. Okay, and now price has changed directions, but what has happened? Where did price come? Did price come close to this? Yes. Was there evidence here that told you that price was breaking down? Yes. We have here weaker projection. Okay, we have good momentum with weak projection, mid-range to slightly deep pullback into an area of structure, and price had an even less correction here. Okay, sorry, even less projection here. So that gave us an expectation of a deeper movement, and price made a new structure high. Okay, so could we have foreseen some of this? Well, we have a clear swing here that we could run, right? Now in this particular case, we fell slightly short of it, but you get the general idea of we can use these lines to help us form a realistic and a good area of interest to look for taking profit or entering trades. Okay, let's erase some of these lines and let's do this again moving forward a little bit. Okay, now price has made a weak new structure high here. Looks like it's going to correct. There's good momentum. We don't expect a deep correction. We expect something maybe mid-range or slightly deep. We have some structure here. Okay, we have some structure here. We can draw the ratios in. We see that we have some structure. We have the 618. Okay, what do we have from a correction standpoint here? We don't know yet. We don't have anything that we can use per se. We do have this, although it's not in the same direction, so we can't 100% use it. Okay, it will come in behind that, so I don't like to use that. Okay, in this particular case, price is still trying to figure out what it wants to do. Now it got into our area of interest here. Okay, price is now probably likely going to move up and retest these highs. We had a little bit increase in momentum here. Okay, but what is our harmonic expectation? Okay, we take that, project it forward, break even, okay, we achieve what? New structure high. Okay, projection, it's about the same. Okay, look at the depth. Okay, where are we likely to correct to? Let's use some of those harmonic skills we have to project a sort of area here. We see that we have some structure in this general area, consistent with our expectation. Okay, we see that we have the bulls already trying to come in, the buyers trying to come in. Okay, now price blew right on past that, but what was our expectation at the very least for price to get to here, right? Price fluttered around. We had an expectation as to where price should come, somewhere in this general area, right? Now price fell short of that, 307, 312 by 5 points. Okay, It gives you an extremely valuable tool to help you estimate your expectations as to where they're likely to come in. Okay, remember, it's extremely difficult for one person to decide where the masses in general as a whole are likely to take price to. And we can do that within 10 to 15 points. You will make all the money you ever want in this business. Now, I've just showed you how to use harmonics, okay, to come up with an expectation as to how far price is likely to go and how far or how deep price is likely to correct. And this works extremely well, okay? Taking into account all the other analysis we have and our expectations, it helps us formulate a extremely valuable expectation. It just adds another level of accuracy and depth to building that zone, to looking for those reversal zones or those correction zones where price is likely to form or to rotate. Okay, so don't be afraid to draw these lines. Don't be afraid to practice like I have. It's always clean and simple with the benefit of hindsight, but you just saw moving price forward, and we just participated in a very strict range in how we, even though price failed on that expectation, once price moved in the other direction, it went where? Right to where price corrected before, where that harmonic expectation came into. Okay, so we'll do this a little more, a couple of more minutes. We'll do a couple more, and then we will stop. So I'm going to project this out again and see that price somewhere in this area here, consistent with a one-to-one completion and some structure, should find some sort of correction in the near future. Okay, see, I told you that somewhere in the near future price should find some sort of a correction. What did price find somewhere in the near future? Some sort of correction. Okay, now extreme price volume here, extreme buying here. What kind of a correction are we expecting? A shallow one. Should we expect something like this? Not necessarily. Could it happen? Sure. Okay, and that didn't happen. Okay, but that was a realistic expectation. Did I tell you that was likely going to happen? No. Could it have happened? Sure. Okay, we expected a shallow pullback here. Okay, so now what becomes important from an expectation standpoint is that we can, if you don't want to keep drawing these lines, you can not do that, or you can just say, well, let's just keep projecting lines forward. Where is price likely to go? Okay, profit targets are extremely important. Market is accelerating, corrections are just getting smaller and smaller. We're likely to get past this, and that's how you can estimate whether an expectation, or from a harmonic standpoint, is likely to fall short or extend past, by looking at the order flow and by looking what's happening within the volume of these candles, the momentum, the projection, and the depth, to help you understand whether a one-to-one is likely to get blown out of the water, or price is just not going to get there. That's what helps you seek out extended targets when you're managing a trade, as you've seen in some of my live examples where I look for extended profit targets. That's the reason why price is accelerating. Price is moving faster than I expected it to. It's gaining strength. Therefore, I'm expecting a greater than a one-to-one move, and therefore I start trailing my stop with a set of rules that helps me try to capture that extended move. Okay, so that's all I have for this video. I will be incorporating more of this, since we have talked about it now, into the trade examples that I put out, and we're going to be doing another live trading in the near future, probably towards the later part of this week or the early part of next week, and we'll start using some of the harmonics here for the expectations. Okay, thank you very much. I hope this video had value. Please post your comments, questions, concerns on the thread, and I look forward to keep helping you grow as traders and trade at a higher level. Thank you very much, and I'll talk to you guys soon.